In market news now, Japan's tech-heavy Nikkei gave up early gains of more than 1% to end the day almost flat. Mainland Chinese blue chips slipped 0.25%. The week is packed with big risk events from consumer inflation and retail sales in the U.S., along with Chinese retail sales that are out on Wednesday. Meanwhile, locally, Sipho Ngosi has stepped down as the chair and non-executive director of JC-listed chemicals and energy company Sasol. Sasol confirmed to investors that Ngosi's resignation officially took effect this past Friday. Ngosi was appointed to the Sasol board in 2019. The board has elected Stephen Westwell, who is a current non-executive and lead independent director, as pro tem chair. To give us more perspective on the markets, we are joined by Gary Boyson, who's a portfolio manager at Rand Swiss. Gary, thank you so much for your time. With a week that is already filled with some comments coming out of Fed officials, depending on who says what, as well as a host of data coming out in terms of US CPI and PPI and retail sales, how are we faring right now when you look at the markets?
Perfect. Yeah. So as I was saying, a pretty good week so far. This Monday midday, all of the major sub-indices are higher. So we've got the financial index up around a third, the industrials also up around a third, and the resources really shooting the lights up around 1.7% currently. That's dragging the all-share index up, roughly 0.7%. And this is following on optimism that we saw in the S&P 500 overnight. So the S&P 500 finished up 1.56%. Even though we've got futures down slightly, and that might have something to do with Moody's downgrading their outlook on the US debt profile from stable to negative. But over in Europe, things are looking positive. We've got the FTSE up 0.7%. Paris and Germany also up nicely. The currency is stable today, so a stable rand for a change. We're just hovering at around 18.70 to the US dollar. So all in all, a nice Monday. But as you said, an incredibly busy week coming up. We're still in earnings season overseas, so lots of US companies reporting and plenty of economic data to chew on as well.
Speaking of earnings, we've got results that were out from VOCOM, and they did report those startup losses in Ethiopia. However, when you look at the trade, late morning trade, that share was down about 5%. Over the past year, down 16%. What do you make of VOCOM's numbers?
So I don't think the numbers were bad. As you said, they're fairly acquisitive at the moment, which is very different from VOCOM usually. So yes, the stock didn't like the numbers. It's pushed it down. Yeah, it's just under 5%, still down, and that might have something to do with that decline in operating profit, as you mentioned. Really, the Ethiopia startup costs hitting it. They're investing via Safaricom. They do have 4.1 million subscribers there as well, which is small in the group's I suppose overall life at 196.2 million customers total, but also these results being skewed obviously by the inclusion of Egypt in the numbers. So your revenue up 35.1%. If you include the Egyptian business, but kind of mid-single digits if you exclude it. So many people hoping for a little bit more organic growth. Obviously they've seen a little bit of a hit on their South African operating profit line as they invest heavily in their network, really to account for load shedding. So I think a difficult operating environment they're in, and obviously trying to expand into the rest of Africa, kind of following in MTN's footsteps. And maybe markets are a little bit concerned about that. We know how difficult it is to operate in the rest of Africa, but certainly I didn't think a bad set of results, but the market obviously hoping for a little bit more.
When you look at some of the commentary coming out of the States in relation to the US and possibility of a recession call, what would you say is the Rand Swiss recession call for the US? Is it earlier in the year in 2024, or is it late 2024 if you come to some kind of agreement?
It's a difficult call. So I definitely think that a recession is possible. To try and gauge the depth of a recession in the US is difficult. The US has its own rules about when it declares a recession and when it doesn't declare a recession. And so, in the rest of the world, if you have 2 negative quarters of growth, it's a recession. In the US, you need the Bureau of Economic Research to actually say that it is a recession. So looking at it, we think a shallow recession potentially in the US next year. We do think a recession is likely. Now, the timing is very, very difficult. So there's obviously a lag between, hiking interest rates and the effect on the underlying economy. That lag can be anything from 6 months to, a lot of people say, 18 months, 30 months. There's a lot of different estimates, and it's difficult to tell when financial conditions will tighten enough. These are very complex systems. An economy is an incredibly complex system, but we think that, I don't know, if I had to put it down, I'd say mid next year, but we do think it's going to be a shallow recession. I wouldn't bet against the US as an economy, as we've seen. In spite of much, much higher interest rates, the consumer there has been incredibly resilient, and their businesses are very, very nimble. I don't know if I would bet against the US. So yes, potentially a recession, but probably a shallow one.
As we wrap up, there have been so many rapidly changing narratives in the market. Where are we right now?
Well, there's lots. It's a big question. So, as I said, at the tail end of earnings season, at the moment, we I think there's still very interesting thematic, stories, narratives doing the round. I still think that the AI theme is very, very prevalent. I think everyone is looking for how AI is going to be applied within these businesses, and we're still seeing elevated valuations, certainly for anything that has to do with AI. But the big one is of course the interest rates, which we've already discussed. So we are looking for when are interest rates going to be cut. Market pricing is saying that there's about a 57% probability that we'll see a cut by July 2024. I don't know if that means that markets have collapsed ahead of that and that we're in a deep recession, and that's why the Fed will have the narrative, have the argument to be made to cut interest rates. But that's where the market is pricing it, and based on that, I think there's a lot that we've got to watch. As you said, the inflation theme is also absolutely key.
Yeah.
We're seeing it feed into just so many businesses, and as you said, we've got the headline and core numbers coming out of the US tomorrow, which are going to be very, very interesting to watch, and definitely, I think, top of most traders' minds.
Yeah. Gary, thank you so much for your time. That is Gary Boyson, who is a portfolio manager at Rand Swiss. And as he mentioned, it's a data-heavy week with US CPI out tomorrow. The Rand's currently at 1870. So between the global economic data coming through as well as local, with those Q3 unemployment figures as well as retail sales coming out, we'll have to look at what the Rand is going to be doing and some of the factors that are going to be driving that. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.